Good morning, traders. It's 8:04 a.m. Chicago time on Tuesday, the 6th of November, 2018. It is U.S. midterm election day. Sorry about the delay. The microphone tends to not work very well when the mute button is pushed. I have no idea what kind of a design that is, but just kidding. I had to change my office around yesterday, and I guess I hit the mute button while I'm on it. Took me a while to figure it out. Anyway, thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And here we are. So the biggest thing on deck today is the U.S. election. I'm expecting to be in front of my computer from approximately 6 p.m. Chicago time, 7 Eastern, all the way to midnight. It may be a non-event, but, and I don't expect it to look anything like Brexit or the presidential election, but still expecting this thing to pop higher, more likely than lower. So we'll see where we stand this evening, but it's a key day, key play. The overall market sentiment this morning is really risk off slightly. There's not much going on. Yesterday's range was very, very low relative to the most recent action, and so it's we had an inside day yesterday in the S&Ps. The Nasdaq actually sold off and came right back into the range, the fat part of the range, and so on. This morning, the Euro stocks are lagging by only about 12 points, so they're down 37 basis points. The leader today is gold, up 23 basis points. Crude oil's flat, unched on the day at 63.10. The dollar is flat, so it's really a mixed bag. Sentiment is really neutral coming into today's session. In terms of what to expect when you're expecting, in terms of what we're looking for today, we are, for some reason, looking at yesterday's calendar. You can tell how unprepared I am today. In terms of the calendar, the only thing we're getting is the JOLTS job openings prelim for September at 10 o'clock. The JOLTS job openings just lists, I believe it lists the number of jobs open and are not being filled. And it's an indicator of how hot the employment market is. Other than that, there's nothing on deck. Look out for news. News is king right now. It's I expect that there will be a lot of noise on POTUS's Twitter feed. I'm sure there are going to be surprises and so on. This is just reality TV in real life, really. But I'm paying very close attention to the news currently. I expect that there will be a few tricks there. So that's really it. Let's take a look at what we expected yesterday. Here's yesterday's overall plan. I can't say that either scenario played out very, very well. We ended up with scenario 1 early on. That's the one I was trading off of. Just sell the push up for a test of 27.1975, and then my expectation was to get down into 15 quarter and potentially 12 even. 12 even is this low here. Here's what we got. Let me show you it in the trigger chart, just easier to see. And the trigger chart, look at how just not active this session is. We see the whole session on one screen. That gives us an indication of how few rotations there were yesterday. So my expectation here is to push to 34. It got to 33 1/4, and then I'm looking for the short to rotate down Beautiful setup on the mid here for the continuation. We get to 1975, first target done, and then we start walking ourselves down into 2715.75, and we stop at 17 even, and then push right back into the opening swing and the mid VWAP area, and then we end up extending the range up. So we have a range extension up showing bullish, so shorts are off the table. Once we see this happening, shorts are off the table, and then later on we extended the range even farther to 43, which is the next big area up. The target upwards was really the 2737 area, the Friday LVN, key LVN above, and that's basically where we ended up closing. We closed at 2739. Again, nice test of the IB on the pullback. There were some really good divergences up here. Pretty good trading, very slow though. Yesterday's volume was off from the 20-day average, 20-day mean. Yesterday's volume was off by about 45% by the end of the day. We only traded 1.07 million. 1.07 million versus the 1.1 million mode that we have for the day session on the pit. This is about half of what we've recently traded in terms of volume, day volume. So really, things have slowed down. We have an inside day. We traded right inside of the Friday range. Not so with the NASDAQ. The NASDAQ dropped below, chopped around, and ended up coming into the range and closing inside of the range. Some divergence there with techs. Techs were very weak yesterday coming into the session. Right off the open. Here's my underlying an overview chart. The purple is your NQ. The dashed lines are the key underlying sectors of the S&P. The dashed line that I'm pointing at here is the XLK, the technologies, and it ended up recovering by the end of the session and finishing only down 12 basis points. But you can see early on it just dropped and dropped and dropped, with financials pushing the other way. The financials is the other dashed line, blue pushing higher and higher and higher, leading the pack, with healthcare, which is the green. So overall, just a messy chart with crude falling off later in the session and holding as the weakest of them all. Financials just led the pack all day. Along with healthcare. The Dow did pretty good. Industrials held up pretty good, but overall did pretty well. That's some poor English there. Overall, though, just a mixed bag. Carrying on, I want to show you that the overnight session, again, just very low volume. Yesterday was actually a little bit better than the day before. Look at the profile of the session we went, the overnight session for yesterday's session versus today's. At least we have a little bit more volume and a little bit more range. Looking kind of bearish this morning, holding below the close, holding below mid VWAP and the low volume node onto the double distribution, which looks something like this, like the head of a fish or something. And so we're holding steady. You can see that we just did not move much at all from 3 a.m. Chicago time onwards. That's just an hour after the European indices open. We just went sideways and are just holding steady. The market is just holding its breath at the moment. And not going anywhere. Another thing I wanted to point out, I want to switch this profile over and just look at the last few days. So we have these last few days that have gapped up and essentially just gone completely sideways. This profile here is showing us that 2722 is the point of control in this area, which is well below us. It's about 13 points below where we are now, and we have been in complete balance and basically hands off. You can see that the volume is dropping pretty rapidly, and so is the range in this area. So this is where I get my mode from for volume. Currently, it's stepped up to 1.19 million from 1.1. And this is the mode for the day range. The most common day range is 13 points, but it can be as wide as 24 and as narrow as 7 for it to be normal. That's the first Sigma range going back to July 20th of 2015. It's 832 sample days. So it's pretty significant statistically. But back to the picture here, we have a gap up that we just have not closed. We're just trading sideways. So why is this important? Remember, balance leads to imbalance. We're likely to break out of here strong over the last 4 days. We put in 6.39 million contracts in the day session alone. That's relatively higher than what is common. For me today, really the key is to, and by the way, we're right on top of this high volume node. This is the zone where the most volume has traded for the year. So remember, 2731 is our MC point of control in this area. Let me extend this MC out. There it is, 2731. 2731, the black line here, that's the MC point of control. That's the most traded price in the area. The second most traded price in the area is right there at 2727. That's a more familiar price, and we are right on top of it. This is a market that is coiling in price and in volume, so we expect this to break pretty strong from here, one way or the other. Okay, I can't tell you which way, but given the action that we've had recently, this looks to me like a bear flag that may continue lower. We still have some unfinished business on the downside on a gap up with a downtrend. So this is likely, the odds are in favor of lower, a test lower before we start moving up. However, odds are what they are, in that they're historical probabilities and anything can happen. We just got to stick with our risk parameters. So that's the review. Let's take a look at what we expect today. Today is more of the same. So let me extend this profile out so we can see how we have traded. Okay, so overall, let me pull up my master levels here. Master levels, first Sigma is 2779 up here. Close up there. And first Sigma down is 2699 half right down here. So those are the kind of, that's about the range that we are most likely to close in. Looking at the primary scenario today, let's clean this up. Looking at the primary scenario today, the expectation, since we are in balance, the expectation is yet again open auction, push up, get into this 2743.75 or less. I expect an impulse down, push into this 2722 MC point of control, push through, come back, consolidate some more. We are likely to expand yesterday's range. I do not expect an inside day on yesterday's action. And then the secondary is really just the opposite of that. Open auction that tests down into 2722, most likely to push into 2717, 2712, impulse up, and then look for it to test higher and finish in the middle. Again, we are in balance, so don't expect much more than that. If it does break from here, if today happens to be the break day, then we start looking at big areas above 2770, 2780, 2800, and so on, and big areas below, which is the gap close at 2689. And then we start to move towards 26 74, and so on and so forth. But I'm going to be very modest today with my expectations, and just come in with your plans and be tempered about the way you approach the market. If you note, yesterday's Delta closed pretty much flat after exploring higher on higher prices, on a higher close, on close to close that was higher. I think it was, let me tell you, I don't need to think, I know what it is. It closed higher by 15 points exactly, with a delta of positive 3,600 on the close after pushing up to 10,000. So overall, there's just very little participation, conviction on the side of both buyers and sellers. So it is a day trader's market in a way. And by the way, a quick word, volatility is what we want. Volatility is, you can, most traders that I know from experience, the action that you've seen through October, that makes your whole year. And in order to take advantage of that, in my opinion, you need to have solid discipline, solid risk control. You need to allow yourself to survive your losses long enough to take advantage of the fact that the market is moving. Everybody makes more money in volatility. Everybody, fund managers, everybody. And so it's a good thing, right? So it's a good thing for traders, not the best for investors. Investors need to temper things down. Insurance becomes expensive in higher volatility. Premiums shoot up. The VIX shoots up. But overall, this is a market that you ought to be active in as opposed to taking a back seat. I'm seeing a lot of advice from folks who have followers online saying, sit this out or whatever. But I wouldn't want to be trading what we saw this summer where we have 7-point ranges. It's just, that's not where we make money. We make money now, and this is when our plans reveal themselves. Our edge reveals itself more quickly. Good luck today.